Hello guys, welcome back to YouTube channel by Castaway Trader, and today's video is called Bulls Cannot Longer Hold. In this video I will show you where ES Mini and S&P 500 is on the macro 5-wave up fractal that started off the lows in 2009 and what we should expect now, and I will show you how I was able to catch several major tops this week by micro counting. The whole week I've been posting 5-minute charts, and when you go to such a low time frame you can be very precise about counting microwaves, because if you know that you are left with only one last wave on 240-minute chart, 120-minute chart, you can go as low as 5-minute chart and you can start counting every single move just to nail the top or bottom. But before we start, I want you to read that important disclaimer. This is how my website looks like. It is located at www.castawaytrader.com. And I want to show you some information about my private premium chart. If you really want to take advantage of the methodology I use, the harmonic Elliott wave theory, I strongly recommend you to give it a try. Not only we watch on US indices, we closely keep track on GDX gold miners, gold, natural gas, and triple ETFs connected to that. We also keep looking intraday on TWIX and VXX. We have several tricks that help us to nail bottoms and tops in those triple ETFs. And just want to share with you several reviews my users gave me, and people love what I'm doing for them, and that really makes me happy. So you can read it and I will post it on my website. Okay, so I always start from the most important part of the harmonic Elliott wave theory. This is the 5-wave up fractal. Every single trending move, either up or down, in the market which is traded by sufficient number of market participants, would follow that fractal. And let's align it with 500 S&P 500 index, so that particular macro 5-wave up fractal started off the lows of 2009, and here I added for you dates when we made significant tops and bottoms. Of course, we will be talking today about that particular part of that fractal, the recent developments. So we can see that the strongest part of the rally in wave 3 topped in September 2018. Then we got quick ABC down, and that wave 4, corrective wave 4, bottomed in December 2018. And the first leg of the final ABC up of wave 5, it's subwave A, topped in July 2019. So today we can be very confident that that wave A of 5 has finally topped, and here we are dealing with the corrective wave B of 5 down. Let me just show you how it looks like on the real chart. This is ABC of wave 1, topped in May 2011. We got a corrective wave 2, bottomed in October 2011. We are looking at S&P 500 daily chart. And then we got A of 3 that topped in May 2015, B of 3 February 2016, and the final strongest part of wave 3, subwave parenthesis C of parenthesis 3, that topped last autumn, September 2018. And I'm sure all of you remember that sharp drop, which is structured as A, B, and C, and it topped in December 2018. And since then, we had an impressive, unstoppable rally. And this is basically how normally wave A of 5 looks like, and we can see here that I think that it has finally topped. Again, this is daily chart. Now I want to talk today about that particular fragment, so let's zoom in. If we zoom in, we can see that what we show as one move up in wave A05 is instead an impulsive wave which is subdivided into 5 microwaves. And because we have tapped here, our focus should be on that red part, on that corrective part. And as you can see, the first very important consideration you should bear in mind is that B down shall never penetrate, shall never violate the law made by wave 4 down. So this is the law made in December 2018. We may be confident that most likely we will not breach that law. So we are talking about ABC down, which is supposed to make a higher low. Let's zoom in. So again, this is our top of wave 3 made in September 2018. This is quick but deep ABC, like relatively quick because we started in September and finished in December. Anyway, it took 3 months. And from that point up to July 2019, we got an impulsive rally subdivided into 5 waves. This is our classic wave A05, and off that top we should get ABC down in corrective B05, making higher low in comparison to that low, and from here we would get the very final 5 wave up rally, which has to make a new higher high over the top made in September 2018 and then in July 2019. And once we make that 5 wave up rally, making a new all-time high, that would complete a huge bull market started in 2009. So most likely we will see the top of that wave CO5 next year, probably 2020, maybe even 2021. But here we should be confident, bulls should be confident that the game is not over for them. Here I want to pay your attention to one important thing. All I'm talking here about in this video and all my other videos is about the harmonic Elliott wave theory, which is, in my opinion, is much more superior tool if to compare with the classic Elliott wave theory. I used to practice a classic Elliott wave theory and I walked away from that methodology because it had too many flaws and it set me up for failure too many times. Once I switched to that modernized new way of counting waves, my results improved dramatically. And that is one of the reasons I finally started my own service, and I'm super happy for the change I made for my trading and the way how I help other traders now. So the sooner you switch from the classic Elliott wave theory, the better you will be, believe me. And now, because not many people use it, we have a really great edge against those traders who still use obsolete the classic Elliott wave theory. And why I'm talking about that now? Because the fractal I'm showing you now, it's a golden pattern which does not exist under the classic Elliott wave theory. And if you click on my website www.castawaytrader.com blog, you can read 3 articles where I compared the classic Elliott wave theory to that modernized, new, better version of the Elliott wave theory, which is called the harmonic Elliott wave theory. And I explained why that fractal, I did it in March 2019, and all that time, all those gurus who show people how we should use the classic Elliott wave theory told them to short here. So they've been shorting the last 3 months and they lost a lot of money. And only now, only last week, I made a confident bearish call. Those who have been subscribers to other services which used the classic version now understand, even based on that example, how better that better version of the Elliott wave theory, because they see now how bad could be the classic version, in a sense that they told them it's time to short and it was too early. Okay, let's come back. This is ES Mini Daily actual chart. Again, this is the top made in September 2018. This is quick ABC down, which bottomed in December 2018. And the classic version, by the way, still says that's not the bottom of wave 4, it was just the first leg down in wave 4, and they expected a weak pullback in wave B of 4 with another leg down making new lower lows. My opinion, not only it's the bottom of a major wave 4, but a move down, which now I can also expect, would never breach that point until we get a new all-time high, but we will talk about that later. So we got our rally in wave A05, now we should get B05. But that B05 is always structured as ABC. So now you see that A down, B up. This is wave B up, which topped last week. So here you can see I'm expecting a big decline. I'm expecting an impulsive move down, comparable in size to that move down which bottomed in early August 2019. Moreover, it could be even bigger one. It could go all the way to 50% retracement. So basically we measure that rally and we apply retracements. Those four are most common retracement ratios when we deal with wave B down. So this is the green target zone, this is a high probability target zone, and it's pretty wide, as you can see, from 2678 to 26. So it could be a big demand zone, but we will be able to make much more precise estimation of where that move down can bottom as soon as we get closer to its completion. And I will show you in this video how you can use micro counting based on 5-minute charts to make really precise predictions. Let's move on. This is 240-minute chart. So as you can see, we are switching from daily to 240-minute chart, and here you can see how much more details now we can see. And this is, you can see how micro counting work. On a daily chart, you can see ABC up. On this chart, you can see that in fact that B up was structured as a double 3 corrective pattern, ABC of W, ABC of X, and ABC of Y, which completed that last move up, and that was the top of that wave B up. And again from here, I'm expecting wave C down to that area. This is how it should look like. And again, once we get that drop, we should get another strong rally, which would target new all-time high. So as you can see, this is why I love that specific fractal, and I call it the trader's paradise. And those who are subscribed to my introductory video course about the harmonic Elliott wave theory should watch a new video I posted that last week. It's called The Trader's Paradise, and this is where I'm explaining why it's my favorite pattern, and this is where I can make a lot of very accurate predictions. Let's move on. Okay, I decided to record a couple of new videos every week. Summer is over, I came from Europe, have more time now, and I've just posted a new bonus video lesson. You can find it here, Castaway Trader /education at lesson of the week. I will post that link in the description of this video. And in that bonus lesson, I will be talking about subwave C in corrective ABC structures. Believe me, it's really practical video and it helps me a lot. As soon as I understand something new about this theory, I try to prepare, a write-up, and I will post it in my private chart. And after that, after thinking about it a couple of more days, I will try to record a video, and I will be adding those videos to my existing video courses. I have 2 best-selling video courses, but I will make sure that 2-3 days those videos will be available for free on my website. So you will be able to watch a video, and then I will move it to Udemy educational platform where I host those 2 video courses. And since then, those videos will only be available for my subscribers. I strongly recommend you to subscribe. If you go to my website, you will see a coupon for additional discount for that video course. Okay, now I want to show you how I've been able to track developments and ES Mini over the previous week. And as you can see, you will see here that I have been posting 5-minute chart because I saw market topping and I did not want to miss the point when it would be the top and it would be safe to short the market. So let's start from Friday, September 13, and even last Friday, I kept showing people, and I kept talking about that in my private chat, that we are dealing with the top of wave B of B, capital B, and I was expecting a start of the drop, which we discussed earlier. And on Monday 16, you can see it almost tagged my red target box. It made a high of 3024, and I was talking about the top of 3028. And in my premium chart, we bought some puts here, and we got a nice drop from 3024 to under 3000, and it started to make a bearish flag. And I kept telling my subscribers that the drop is not completed because this is the demand zone, and this is where I'm expecting another leg down, and that A down, B up, C down would be only the wave 1 of the expected large drop, which has to be structured and has to be subdivided into 5 waves. Wednesday, 18 September 2019. So you can see that the first drop turned into some slow grinding corrective wave B up. Clearly corrective looking wave B up looks having topped, and we may count a micro wave 1 down out of 5 waves required for an impulsive decline in early C down. My expectations remain the same. I expect another leg down to 2550-ish area in wave C or 1 down. So I kept telling my subscribers that we were going down. And in my premium chart, we used every single opportunity to add to our shorts. Wednesday, 4 p.m. we got a very impressive and promising drop. And here I was able to close my puts. That was FOMC date on Wednesday at 2:20 p.m. I reported in my private chat that I'm closing my puts, but even myself, I did not expect such a strong bounce. And I wrote to my subscribers that you may be surprised, but this crazy whipsaw has a nice micro count, and that micro count is still bearish. I still look for a drop in subwave C or wave 1 down. In my premium chart, I reported that I sold my SPY puts at 2:19 p.m. and I pointed to that bearish setup and reported that I went long SPY puts again at 3:55 p.m. So what I sold here, I decided to reload at this point because I thought that would be the top and we are going down again, even despite the strength of that great looking rally, that vertical move up. Again, this is the end of the day on Wednesday. Thursday, we got the drop I expected, but it did not make a lower low. And because I traded SPY puts, I could not unload them here overnight. And by the time the market opened next day on Thursday, we got another higher high. And at this point, many bears started to panic because not only we didn't get the drop, but we got a higher high. And the beauty of the harmonic Elliott wave theory is that it lets you calmly analyze the market and see what's going on. And this is what I wrote to my subscribers. On the chart below, you can see that the final wave Y of wave B up is subdivided into A, B, C. This is what I'm talking about. So I said that was the first drop, A01, and from here we started a corrective wave B. This is one. And that where parenthesis B up was structured as double 3 corrective structure. What that means is that it is subdivided into two ABCs. ABC up and another ABC up. And it is connected by a technical wave X, which is also subdivided into ABC. Of course, if you never used Elliott wave theory, is the classic one or a new modern one, it would be difficult for you at the start to identify those structures. But the more you use it, if you use it regularly, you will start seeing those patterns at a glance. Believe me, it does not take me long to see that structure. On average, it takes me like 2 minutes or 1 minute or even like 10 seconds to see such a pattern. And I again reiterated my bearish view. It's Thursday noon. My expectation is unchanged. I want to see wave C down from here. And at this point, I kept adding to my puts. I started to add long-term puts with expiring in November 2019. Friday, 9:15 a.m. We got a really nice drop overnight, but again, by the open on Friday, we got another corrective wave B up, and I started the day saying like it looks like a groundhog day again. But again, I reiterated my bearish view that my expectation is unchanged. I think we made a lasting top yesterday. I was talking about this one, and I expect continuation of the move lower. This is where I started to buy puts like crazy. And in my premium chart, I reported that I'm seeing great opportunity for a lotto. We call lotto like short-term puts. I was talking about puts expiring that Friday, and they were super cheap. They were like 3 cents, 5 cents, and I loaded couple of hundreds of those puts, and many of my followers in my premium chat did the same. And you know what happened next? It dropped. But even at 10:45, bulls just kept holding the market. And again, I sent out another note saying I'm expecting a breakdown of that red channel to confirm completion of a corrective rally in wave B up. I was thinking about that wave B up and start of a new impulsive decline in wave C down. Boom! You know what happened next. We were here at 11 a.m. and then we just got really impressive drop. You know what happened to those puts. They just, went up like crazy. And many subscribers of my premium chat made really good money together with me because it was really accurate bearish call here and bearish call here. And bearish call here, by the way. And it's not because I'm super talented, as many people tell me, but it's because the harmonic Elliott wave theory rocks. I really recommend you to start learning it today, and the best way to learn it today is to subscribe to my premium chat, because this is where not only I post setups, not only I share my personal trades, but I try to explain my subscribers why I think it's bearish or bullish, and every day I try to post additional lesson explaining them specific patterns we can use in the own trading, because my personal goal is to make sure that you can do the same as I do now. Okay, and even at the end of the day, it's Friday 3 p.m. I posted that pullback shaped as ABC up of the low is only subwave A up. Then here we may be watching start of wave B down, which itself is structured as micro ABC down. It can go down to retest the spiky low made earlier today, 3 p.m. Friday, and this is the end of Friday. This is exactly what I expected. We got another move down, which nearly retested the low made by that spike down. From here, I'm expecting another move up in wave C of 2. And that would be ABC of wave 1 down, that would be ABC up of wave 2 up, and from here we may get a start of a new decline, impulsive decline in wave 3 of that parenthesis C down we were talking about earlier. And this is how it should look like. Just to give you a perspective, this is 4-hour chart. We have just made that important top, and this is what I am expecting here. It would not be a straight drop. There will be a lot of opportunities to go long for pullbacks, to short, for continuation of that move down. It's great because we understand a bigger picture. When you understand a bigger picture inside a bigger fractal, it gives you confidence to make so many trades on a micro scale within 1 week and even inside a trading day. Okay, all the charts I've shown you in that video were posted under the basic micro accounts of the US indices subscription package. I sent out several charts a day to my subscribers and I post them on my website. But if you subscribe to my private premium chart, which is more expensive, it costs $94.99 a month. But not only you get all those charts and you get them earlier than other guys because it takes me less time to post them on my chat, but you get much more than that. You get more updates. You can talk to me, you can ask me any questions, you can ask me if you don't understand something, and it's really difficult for me, just to communicate when I send out alerts by email. But not only that, in addition to US indices, I cover gold, silver, crude, natural gas, and not only that, on top of that, we also trade triple ETFs like NUGD, JUNAC, DVT, UGAS, DGAS, and even TWIX, which is connecting to volatility on SPX options. So, in addition, finally, I would also remind you that I have 2 great video courses where I try to share as much as I personally learned trading in the market. I personally trade, and when I trade, I try to find something that is a great sign of topping or bottoming, and I'm keep recording new videos. So you can see that was my first course, and now it has over 130 lectures. My second course is a relatively new one. I posted it just a couple of months ago. Now it has a little bit more than 50 lectures, but I will keep adding more materials because every week, again, I will be recording 1-2 new lessons. You can subscribe for both courses and you can get 3 months free access to updates on the US indices. So here it says the offer is valid for new subscriptions made starting July 21st, 2019. And that offer was originally valid until August 1st. I can extend it to October 1st. Thank you for your time. Keep counting waves and make money, and join our club of traders who are happily trading the harmonic Elliott wave theory. Thank you so much.